My name is Douglass Lodmell, and we are continuing our discussion with economist and investment advisor Benjamin Lodmell. Welcome back, Benjamin.
Thank you.
So we left off last time talking about the United States dollar has been the reserve currency for the world's banks. Let's just pick up right there and tell me, what that means in real terms and how that's changing today.
Okay. Well, with focus on investors, you had mentioned that the United States is effectively bankrupt.
Yes.
And that the reason why this didn't seem to matter is because it's the world's banker to the world's central banks.
Right.
And so it's almost as if you have an unlimited demand for your treasury bonds.
Which we've experienced.
Exactly.
Yeah.
And that is now changing. And the reason is because other central banks are looking at the currency that backs their currency with a less forgiving light now.
Right.
Because of the fiscal status of the United States federal government. And in the past, the United States was forgiven because there was always an assumption that they could go to the taxpayer base and correct their fiscal problems immediately.
Right.
And that's no longer the case. There is a suspicion and a skepticism that's very, very broad and deep that there is not the political will to actually balance the budget.
Which, I mean, if you've been awake during the last 20 years of American politics, it seems to be accurate.
It is accurate, and it's not really a question of politics anymore. Most investors are not real emotional about American politics,
right.
Especially when they're non-U.S. Based people. What it is it's just a pragmatic evaluation of the reality of things, which is that the United States has gotten far too deep in debt.
Right.
And they can't get out. And
can we talk about the numbers there? Because again, David Walker brings this up, and I would actually encourage anyone to just Google on YouTube "Fiscal Wake Up Tour David Walker." Watch it for yourself. I really want people to get that this is not something that a radical fringe is talking about. This is very real, and it affects what we're doing. But he makes the point that while the real on-balance sheet debt is $11 trillion, that's the amount of bonds that we have out. The real debt is at least 54 trillion, if not, under some estimates, over 100 trillion. And we're talking about an annual budget for the United States of 3 trillion. So we are radically bankrupt.
Well, and that also includes the Social Security Fund, which it's just the numbers don't crunch. Another website is the U.S. Debt Clock.
USDebtClock.org.
I mean, if you look at it, you understand that the open-ended entitlement system it's a blank check.
Right.
And there's not the political reform to fix that.
Right, which is why that upper end number, they don't know because the check is blank. We don't know what it's going to cost.
Any way you look at this situation, a rational person comes to the same conclusion, which is that the fiscal situation in the United States is going to, and already is, undermining its status as the banker to the world's banks.
Right.
And central banks throughout the world have already reacted.
Right. By diversifying their holdings of their reserve currency.
Exactly.
So now, where it was,
they don't want to lose either.
Right.
Think of central banks effectively, their foreign reserves are being managed like a portfolio of an individual.
Sure.
I noticed India just had a huge purchase of gold. There was another big diversification, I believe, by India into the Canadian dollar. Yeah.
Okay.
So I mean, these are.
And so these countries are actually now looking at the balance sheet of the countries they invest their reserve currencies in.
Right.
So they're actually going, Canada's balance sheet is actually better than the United States. If the United States stumbles, I'd rather have Canadian dollars.
Right. They're diversifying like any rational investor would.
Right. And so that is something that an American investor simply must understand.
Absolutely, because think of the United States dollar as a mechanism to store value for either future purchasing power or the ability to buy something. An investor would be buying equity. You want to make sure that mechanism to store value doesn't lose value.
Right.
To either purchase something in the future or
invest. It's like putting your milk in the cupboard and your milk is spoiling, one carton at a time, because you didn't store it properly.
Exactly.
Yeah.
And so again, institutional investors have moved on long ago.
Right.
But this message hasn't hit the popular retail investor. And in the United States, you know, what is there, 25 million households that probably fit the qualification of people that need to start thinking in a much more global sense about their net worth, about managing their net worth.
Right.
And so, indeed, I find myself strongly recommending every day that clients begin taking positions in alternative hard currencies.
Okay. As a store of wealth until they can get into a real investment, not as an investment itself, correct?
Correct.
Okay.
Because I make a distinction between speculating.
Right.
Speculators are people who buy things because they believe that the price of whatever it is they're buying is going to
go up. Okay.
And I just don't believe that's a good way to invest.
In foreign exchange?
Well, in anything.
In anything, okay.
Yeah. Investing is understanding that you're buying a balance sheet, you're buying a future income stream, you're buying the assets of a company. Until the interest rate environment changes, I'm strictly investing in equity.
Okay.
And so, yes, cash or currency is a mechanism to store value that is waiting to be invested in equity. And we slowly buy into equity. They call that cost averaging.
Right.
It means managing the market volatility by entering into an equity slowly.
Yes.
Building positions
slowly.
slowly.
When you look at an equity portfolio in which you have a long-term plan around, the daily price, if it's up today, it's down tomorrow, doesn't matter to you. That's not what you're looking at. Well, I know from experience, because you know, you manage my money, of course, and you've trained me on how to look at a statement.
Yeah.
And when I see the price go down, I actually have an emotional high. I'm up because I realize I get to increase my holding with a lower cost per share while lowering my cost per share.
That is true investing. The goal is to build large positions of individual shares. It's a more cost-effective, it's more liquid. You're not allowing a third party to steward your wealth, which this crisis showed.
Not a good idea.
Boy, it's serious. You know, mutual funds aren't as credible as everyone thought they were.
Right.
Most of them froze assets.
Yeah,
and they're also very expensive.
Hedge funds turned out to be completely liquid.
Well, it's for individual investors, I believe the wisest way is to build positions of international hallmark equities, and with a focus on lowering your average price per share. That means you're buying on dips, and so you're doing it slowly. We have the same perspective for buying into currency.
Okay, so let's talk about the actual stocks, just a basket, so that we can help the listeners understand specifically, but we're going to do it on the next show of The Mind of Money. Thanks for joining us, and we'll see you next time.
Thank you.
On The Mind of Money.